Hey, it's Chris Lafratta, your favorite Calgary realtor. Feel free to reach out to me anytime, 587-839-0430 if you're moving to or in and around Calgary. So the Calgary Real Estate Board just came out with their 2024 preview. That's as well as a 2023 summary of the market up until now. So Q3 summary. Our sales were up 24.33% year over year, very substantial. New listings up 12.29%. Inventory down 30.58%. Benchmark price up 7.41%. Sales to new listings ratio up 10%. And the days on market down basically 30% to 24 days on market. So very much a solid seller's market, low inventory for the demand. Forecast for 2024. So as we move into 2024, persistently high inflation and interest rates are expected to weigh on economic activity as consumer spending and business investment are expected to slow. Yeah, that sounds about right. I don't really see that impacting us here in Calgary like it's hitting in Ontario. There are quite a few areas in Ontario that are down 30% from the peak of February 2022. I know some segments also in BC that are down. It's not nearly as badly impacted as Ontario. But with these interest rates, the affordability is so bad in BC and Ontario that those people really, if you're not already established in the market, it's really tough to buy in, and they're really stuck with the choice of moving somewhere else. And Calgary's a pretty nice place to live. So I think for your typical family home here, I really don't see that impacting it. So let's move on. This will also help reduce the job vacancies in the province and cause job loss in sectors most reliant on consumer spending. Perhaps. While economic growth is expected to slow, Alberta benefits from higher commodity prices and stronger international interprovincial migrations. Yeah, migration to the province is up. Oil price is always very volatile. This will help offset the impact on the economy and our housing market. While migration levels are expected to slow in 2024, I don't know why, levels are still likely to remain relatively strong, providing fundamental support for housing demand. I don't see them slowing. The country keeps growing in size, and there's just not a lot of room left for people in Ontario and BC, so it doesn't leave them with a lot of other options. At the same time, improving starts and rising new listings will offer more supply choices in 2024, helping to support stronger sales activity as those previously looking to enter the market will have more options. Improving starts, so they're expecting there to be more housing starts. So that is dependent on there being the developments ready to build and the labor ready to build those homes. That's not a guarantee. Furthermore, a pause and a potential rate reduction in the second half of 2024 will provide more certainty for purchasers, supporting housing sales activity at higher levels. The interest rate prediction game is not a very good game to be in because there are not very many people who had predicted the rise in interest rates that we had. And given that pretty much every expert was completely dead wrong on that, I don't give them a lot of credence. Although I would expect at least the fixed rates to soften a bit by the spring. But I also said that last spring, and it didn't happen. Overall supply gains should start to support more balanced conditions by the end of the second quarter. ultimately slowing the market's price growth pace in 2024. Yeah, sounds about right. Probably going to. I don't really see the prices shooting up much more. I mean, these interest rates must have some impact, but we'll have to see. However, the balance conditions are expected to be driven by higher price products first, and conditions will likely remain relatively tight for lower price products in the market. Yes, so anything over $700,000 now is getting harder to sell. Anything under that is still very easy to sell. And what we've seen again, as interest rates have creeped up, the lower price products, townhouses, condos, semis, be really attractive because pretty much anyone can afford them. But the higher end neighborhoods, the higher end homes, a lot harder to sell. While both prices and sales activity are expected to rise in 2024, there is significant risk to the outlook. Yeah, a lot of uncertainty. The first consideration is the overall economy. Should global economic conditions slow, weighing on commodity prices, we could see a sharper pullback in economic activity in Alberta. Yeah, we're quite sensitive to oil price in Alberta, less so than in the past, but it's still a major factor. This could also affect employment activity, resulting in broader job losses. Should this happen, we could expect a pullback in sales rather than a modest increase. Yeah, definitely. That being said, you're pretty safe buying something that isn't luxurious. So like a standard family home, semi-detached, or a townhouse. That's very safe. The higher end stuff could be a little bit more risky. The next major risk factor is migration levels. Should migration levels remain relatively strong, especially from inter-provincial sources, we will likely continue to experience challenges with housing supply, limiting sales due to a lack of options and causing stronger than expected upward pressure on home prices. I don't see the migration levels easing off anytime soon. One thing also to keep in mind is that with these interest rates, a lot of the larger projects, more so in Ontario and BC, have been scuttled. So they're keep in mind builders have loans, and with these interest rates, it's getting harder for them to afford their financing. And if they have to have that financing on a project for a year, 2 years, 3 or 4 or 5, depending, it's just not feasible to build these larger projects, which are really necessary to house these extra people that are being brought in the country. So, the supply shortage is probably going to get worse in a year or two or three. It's probably not going to get better. We're in a pretty safe position now, just given the lack of supply. Key indicators. All right. Alberta's population year over year went up 4%. That is insane. That's actually insane. 4%. Wow. Okay. Net migration went up. We had 13,000 from net interprovincial migration. So that's so some people leave Alberta, some people come here. So take the plus and the minus and put them together. What do you get? 13,000. That was quarter three. A quarter of those people came from BC. About half of them came from Ontario. And the international migration, we went up by 31,000 in quarter three. I really wish they didn't use orange font on this brown background. It's not easy to see. All right, our employment, this is everything. So it went up quarter over quarter, 3.82%. That's pretty good. And year over year, that's 3%. Pretty good. Full-time up 5.25% year over year. Sorry, that's quarter over quarter, and then 2.73% year over year. So people are getting jobs. That's great. Part-timers down a little bit quarter over quarter, which is a minus 3.18%. But year over year, which is the longer term trend, which is really more important, we're up 4.62%. Pretty good. Unemployment rate, we're down a little bit quarter over quarter. So our unemployment rate is 6.2%. Year over year, it's actually up substantially. So we're at 6.2% unemployment rate. That's actually pretty high. Year-to-date housing starts. So our detached homes were down basically 9% year over year. Semi-detached homes are up 3.42%. Row houses, so townhouses, up 31%, and apartments up 20%. So one thing to keep in mind, it's going to take 2 or 3 years, maybe 4 or 5, to actually see these condos get finished. The townhouses don't take that long. The semis, they take about as long as a detached house. The detached housing, the decrease in that is just we're wanting more density. If you look at the total of everything put together, it's up, but the density is what we're looking for. And the rental market, rents are up 13.6%. And I think in some cases it's higher than that in certain neighborhoods. So our year over year benchmark price changes. The way they've done this graph, year over year, so anything in the dark blue is more than 6%. So it's pretty much all more than 6%, except for the city center. I can tell you that the east and the northeast have gone up the most. So those are, generally speaking, the most stigmatized areas of the city. But with the interest rates that we've had and these price increases, it's really hard for people to buy into the more luxurious areas that they probably actually want to be in. So they're settling for the lower end neighborhoods, causing those home prices to increase. So following several consecutive quarters with slower sales, a boost in sales for homes priced over 500,000 offset declines reported in lower price ranges. Lack of choice for lower priced detached homes has prevented stronger sales for detached properties. So basically, there are no cheap detached homes anymore. That's essentially what they're saying. Year over year, detached home price gone up 9.65% and 3% quarter over quarter. That's pretty substantial. Semi-detached. So both sales and new listings rose over levels reported in the third quarter of last year. While conditions are not as tight as last quarter, the shift did little to improve inventory levels, amongst the lowest ever reported in the quarter. Yeah, semi-detached. So when we're talking about semi-detached, look at the difference between city center. A semi-detached, the price is $853 benchmark price, and then if we look in the east, which is right beside it, the price is $346. So less than half. That's a bit of contrast there. So in the east, a semi-detached is a super cheap, super affordable property that almost anyone can jump into. In the city center, a semi-detached is, for Calgary, a little bit on the higher end. But generally speaking, a semi-detached, especially one that isn't part of a condo complex, is something that a lot of people like to be in. It's the next best thing if you can't afford a detached. And as long as your neighbors don't make too much noise, it's all pretty good. Again, all the areas here actually went up more than 6%. And our benchmark price went up 9.5% year over year. Row houses, these have been super hot. Townhouses, phenomenally hot. Again, the difference between city center and east, they're right beside each other. But the east benchmark price $249, city center $554. Major difference there. we've gone up 15.5% year over year. So if you invested in a townhouse 2 years ago, you've done very well. You've done quite nicely. Sales up 16.43% year over year. New listings up 13.14%. Inventory down 40%. Months of supply 0.88. A very, very strong seller's market. Days of market 20. And condos. Now this one is interesting because for our condos, they're all up more than 6% all over the city. The contrast between the city center and the east that we've seen for detached and towns and semi-detached, that's really not present here. Condos are pretty affordable throughout Calgary. People here don't really want to be in a condo. Generally, they want something with a little bit of land. We have a lot of land in Alberta, so the condos, they're not the best long-term investment. I've seen a lot of places that haven't held their value over 10 years. And you just need one maintenance issue that isn't held, it isn't dealt with very well, or some surprise expense that just makes units in a certain building hard to sell, and then your investment is just toast. Our benchmark price up 13.5% year over year, 3.56% quarter over quarter, quite substantial. Our sales year over year up 58%. So if you have a condo, now's a good time to sell them because they're actually selling. Listings up 33%, inventory down 26%, months of supply at 1.32, down 53.73%. So very much a seller's market. Sales to new listings 85.7%, days on market 28%. Good condo market. And then surrounding areas, Airdrie, we've gone up 8.2% year over year, Q3 to Q3 before. Benchmark price up 6.1%. Chestermere, sales up 58% year over year. There's a lot of new builds in Chestermere. That's just outside to the east of Calgary. Our benchmark price 613% up, so at 664. Strathmore, sales up 17.78% year over year. Benchmark price up 5.81. Strathmore is not that bad of a drive, actually. Okotoks, sales are down by 1.1%, so basically the same as last year. Benchmark price up 7.52%. Okotoks, very desirable. Cochrane, sales down 1.28%, so basically the same. Benchmark price up 4.39%. And we're going to dive into a bit. Airdrie, so our months of supply, just 1 month supply. Airdrie, super hot, very easy to sell anything there. It's not that much more affordable than Calgary. Actually, it's quite a desirable place to live. I wouldn't want to commute to downtown Calgary from Airdrie, but if you work at the airport or somewhere in the northwest, it's not a bad commute. Cochrane, so months of supply, 1.91, so not as hot as Airdrie, and that's down 6.54% year over year. Days on market actually up 10% year over year. New listings down 9%. Okotoks, benchmark price up 7.52%, and quarter over quarter up 0.93%, so pretty stable actually. Days on market 21.8 days, so that's a pretty good amount of days. Months of supply 1.13, so we're actually hotter, more of a sales market than Airdrie or Cochrane. Sales pretty much the same as last year. Chestermere, so months of supply 2.27. This is something that I've seen. It does take longer to sell something in Chestermere than in, say, Airdrie or Okotoks. Why? It doesn't really have that as good of a community vibe as Okotoks or Airdrie. It really is just like it's kind of a town, but it's really more like just a neighborhood outside of Calgary that's part of Calgary, and it's right beside the east, the less desirable areas of Calgary. Although Chestermere is itself quite desirable, there's a very nice lake there, but it's not too far away from places in Calgary where people wouldn't want to live. So I think that sort of stigma sort of perhaps cross pollinates into Chestermere, but there's nothing wrong with Chestermere. It's just not as desirable. It's not as desirable as Okotoks or Airdrie. High River. So High River is like 45 minutes from Calgary. It's 1.3 months of supply. Very much a seller's market. All right, Strathmore. So our month's supply here, 1.38%. Very much a seller's market. We're getting some new builds in Strathmore. Strathmore has a really good small town vibe, which a lot of people like, and it's not that far of a drive to Calgary if you're working in the city. Days on market down 10% to 32.75 days on market. Sales up 17.78%. And our benchmark price up 5.8% year over year. Canmore benchmark price up 7.71%. Months of supply at 3.49. This is really a luxury town, ski town, not something that I typically deal with. So I'll just skip over it. All right, so that's about all that we had to look at here. I don't know if we're going to see serious price increases going. They're probably going to keep inching up, but I don't think we're going to. With these interest rates, it has to eventually take some sort of a bite in. But we're not seeing the prices drop like in Ontario or BC, which is it's kind of nice. And that's just because the affordability is so bad in Ontario and BC that people there are kind of being forced to move here. And there's no let up on the international migration, so people coming to the country, that's not stopping. The federal government is not stopping that at all, and those people have to live somewhere. We're one of the few choices. All right, have yourself a great day.